I'm now being joined in the studio by Bola Ajomale. He's a Managing Director, Chief Executive Officer of NASD. We're looking at the OTC equities market, and also we'll look at the OTC bond market. But let's start with the OTC equities. Thank you so much, Bola, for being here. Let's start with the OTC equities market. Now, I do know that some companies not listed on the NSE also do have investors or shareholders, if I can call them that, and we have quite a number of them. They're making progress. These are companies that have a large turnover in terms of perhaps millions. Perhaps some of them will run into billions. But tell us how this works, what these companies are, and how the process works.
Well, thank you, Esther. Starting from the way that the economy is structured, you have multinationals, you have big national companies, you have individual companies, you have private companies, and all of them have one thing in common: that's investors. Now, the companies can decide on either to list their shares on an exchange, or they can decide to keep their shares off the exchange but allow the investors to trade their shares. Right now, there isn't any organized market where shares that are not listed on the Nigerian Stock Exchange can be traded. And so what we are doing is we're creating a platform where these can now be traded in an organized fashion.
So that's NASD?
This is NASD.
Okay.
So what we have done is we have created a platform where if your shares are not listed on the Nigerian Stock Exchange, you can still go there and quote your shares as a mention how much you have to sell and at what price you want to sell it, and an investor on the other side of you, who is a buyer, will be able to buy it up from you.
So how do you determine the pricing? Is there like a minimum and in terms of the number of the shares?
For a large part, most equities markets, or most markets, capital markets, are a function of a buy and a sell meeting and agreeing on a price. And I tell a lot of analysts that analysts may determine a price by projected valuations, various methods of valuations, forecast earnings, cash flow, discounted, and so on. But the bottom line is the real price of any investment instrument is the price at which somebody is willing to sell and another person is willing to buy. That really is what would determine the market. So we can't
look at perhaps, for example, hypothetically speaking, let's say we're dealing with company A, it's in the consumer goods, fast-moving consumer goods sector, and we know that we have such stocks, companies listed on the NSE, and we know perhaps, can we get like an average price? We know what this company, how big the ones listed, how big their turnover is at the company is, and what is traded in terms of valuation and all of that, and then determine that, okay, for this company A, since it's perhaps in that category, we can detect or come up with a price for it.
Well, you can, but performances differ and differ widely. So if you take the petroleum industry, for example, they all don't perform at the same level, they all don't have the same kind of profitability, and they all don't have the same number of shareholders, nor the same number of shares in issue. So even if, for example, two companies generate 100 million in profit, but one has 500 million shares in issue, and the other one has 50 million shares in issue, well, clearly there will be a big difference in the valuations you give to each company. So most of the time I would advise that people take a security on its value, on its return for its price. And really what you should be looking at is the yield that you're getting on whatever instrument that you're buying.
Well, let's put them into sectors. What kind of sectors are we looking at? These companies, like, do we have a number of them, those companies outside of the NSE, not listed, and are actively, engaging investors in terms of selling their shares?
Oh, yes. For every sector that you have listed on the Nigerian Stock Exchange, and internationally you have about 12 sectors, really. Okay. So you've got the food and beverage, you've got the banking or financial services sector, you've got the properties, you've got telecoms, and telecoms can be split into all sorts of things. If you look at any company that's listed on the Nigerian Stock Exchange, you will see something that is similar that is not listed on the stock exchange. So if you take the foods production, for example, you will see a Unilever, for example, or a Nestle that's listed. And you were talking about Nestle not too long ago. That's listed on the Nigerian Stock Exchange. And then on the other side, you have a Wamco, which produces peak milk, that is not listed on the Nigerian Stock Exchange, or a Dana that's not listed on the Nigerian Stock Exchange. So for every company that you see that is listed on the exchange, there are some that are not on the exchange. And that's what we are creating a new market for.
Do we have a number, like how many of them are they?
Well,
Like
the general rule we follow is that any security that is publicly held is tradable, is freely transferable by the investor. And by that what we mean is if you are registered with the Corporate Affairs Commission as a public liability company,
the PLC,
as a PLC, then your shares should be tradable on a market. Now, it doesn't necessarily have to be the Nigerian Stock Exchange, nor does it have to be in NESD, but you should allow your shareholders to trade their shares freely. And that's a gap that has always existed, because you'll see these trades are going on, but there's no record of the price. So where
are they going on that? It's funny because obviously there's demand for this market.
There is a lot of demand for the market, and there's a lot of demand coming from the investors, because what happens is investors have bought shares either by way of private placement or by some means or another. They have invested in a company, and you have now got to having more than 50 shareholders in that company, and so they are free to sell those shares wherever they want. But the investor has to go out looking for a buyer. For as long as there's no organized market, they would have to go possibly from door to door, or end up with the company secretary saying, I've got these shares, I need some liquidity, would you buy me out? And it's a lot easier, obviously, and you get a better price if you have an organized market you can go to and say, you know, put this on the market, let's see what the market will pay for it.
What kind of investors, what class of investors are usually attracted to this kind of market?
All levels of investors. I'll give you some examples. You've got the large institutional investors looking to buy up big chunks of companies that are doing well. You have got small investors who have invested over time in a growth company. The company has now grown, has done very well, and is now worth a significant amount. But really, they're not really sure because there's no market for it. There has been no market history established for it. And so, if this market exists, there is a history, they can get a price, and they can sell on it. You have venture capitalists and private equity investors who have come in, nurtured a company up to a certain stage, brought it up to a certain level of performance and corporate governance and financial reporting. Maybe they've invested for about 4 years, 5 years, and now it's the time for them to sell down. This is a perfect opportunity for them to sell down, because they can actually just advertise that, look, we have got these shares to sell down. Whoever is interested in the market, we have brought this company up from this stage to this stage. It's now set to run on its own. We want to sell down, and investors can come in.
So we have these pockets of companies, many of them with a lot of value, doing well, growing, having potential for growth, potential for very strong bottom line, and we have these money flows just happening behind the scenes, as it were.
There's no record.
And there's no. It's quite interesting. So I assume the regulators are aware of this. Is there something that can be done to perhaps bring this, maybe encourage more investors? But then I know that the NSE obviously would be more interested in having these companies come to list.
Absolutely.
That way, have more investors. But
well, first and foremost is the fact that the overall regulator of the capital market, the Securities and Exchange Commission, recognizes the importance, the necessity to have a very transparent capital market. Part of what we missed in the period just before the crash happened was the fact that there was a lot of information, there was a lot of transactions that were going on that were not being recorded. Transparency was not that strong, nor was monitoring of how the trades were executed. It wasn't particularly strong either.
Can we talk about that
was before.
Because I know the private placement, so many things went wrong with the private placement. Many investors have simply refused to return to the market today because of those private placements.
Yeah, many of them went wrong. And again, it was because regulation wasn't there. Now, after the crash, I think everyone sat back and thought, okay, we've got to do something about this. We have to have an organized market at all levels. And what we are doing is we're just adding more organization to the whole capital market structure. We have to have an organized market. The front end of the market, or the big end of the market, which is the Nigerian Stock Exchange end of the market, where secondary trades for listed companies are taking place. You can dimension that, the size of that market. But what about everything else that's going on behind the scenes? We don't know. And so so we're creating that kind of transparency to this previously opaque market.
But who acts as a regulator?
The Securities and Exchange Commission is.
Okay, so while you're still outside of the circle,
we're right. What we're doing is we're now bringing the outside into the inside of the market, so to speak, into the coverage and the vision.
Regulatory coverage, just
into the coverage of the Securities and Exchange Commission.
Now, what is that for you? Because I'm not sure how many of these companies you've come into contact with, and I want to assume from all that you've said that there's good potential, even though there's still structural defects in the economy. There's many of these companies are struggling dealing with power issues and infrastructure issues. But I've heard about a number of them. I've heard of the issue of private equity and how so many of them are doing so well in industries all over the place. For you, what does that say about the economy in terms of how these companies are impacting on the economy?
We've got potentially an extremely strong economy, and we're actually seeing some of that. It can get stronger, obviously, with better infrastructure, both in terms of transport and power and so on. Our real economy can actually get much stronger. But in what we have and in the size, just even the size alone of this economy and the dynamism of this economy, we have got some very strong companies. We've got the telecom sector, which is immense. It's powerful. It is profitable. They're doing very well. And it's something that, with the right idea and with the right amount of initial capital, you can drive a lot of profit. We have got a lot of those. We have identified quite a few of them. And
in all of the sectors, which would you say maybe one or two of them are like leading sectors in terms of size, perhaps potential, and value? Is it we have a very fast-growing middle class.
That's a relatively difficult question to ask or to answer, and I'll tell you why. You've got the agri sector. It is strategic. It is large. Billions are going in there in investments.
There's a lot of transformation going on also.
There's a lot of transformation going on. It is what will sustain this country. It is critical, and at the same time, it is food, so it will sell. Eventually, it will sell. Nigerians will always eat. So if you're looking at in terms of sustainability, the agri sector is a very sustainable industry. If you look at the telecommunications industry or sector, very profitable, very new, very dynamic, and growing.
And many of them not listed.
Probably practically 95 of them are not. 95% of them are not listed. That's a huge segment of the economy as well. Education is not going to be profitable, and I really don't have too many reservations about it not being profitable, because really it is first and foremost a service and something that would drive the economy forward. It's an investment. It's more investment than returns. So I'd say agriculture for a start. I would say telecommunications is another, for the reason that they're both strategic and sustainable.
Now, if these companies have so much value, they're growing, they're all over the place, perhaps particularly in the major commercial capitals, particularly perhaps here in Lagos, Abuja, Port Harcourt. Why do you think, or what is the number one reason why these companies prefer not to list on the NSE?
That's probably a legacy question.
Well, in your experience,
in my experience, we've got a 50-year-old exchange. We have got securities. We've got 200 companies that are listed, and far many more that are in the country. Maybe there's something about the Nigerian approach to doing business that does not lend well to being listed. Maybe it is a matter of, some people have said it's a matter of companies not wanting to respond to regulation, but I find that most untrue in what I have come across. So why there have not been more of them listed on the Nigerian Stock Exchange, I really cannot answer to, but they all have investors. And that's really where the focus is.
Would you, from an analyst point of view or from an investment point of view, do you think it's perhaps more, I know they're doing well outside of the being listed, but do you think perhaps it could be profitable for some of them if they were listed, at least in terms of access to credit? We haven't had so many IPOs, I know, but perhaps in terms of access to credit, it's just basically expanding the company.
Access to credit, you could raise a corporate bond
instead,
and you could list the bond. So you could list the bond without listing the company.
Okay.
Yeah. So for access to credit, that's a totally different thing. For access to funding, generally, once you've got your core capital together, a lot of the time you're probably not going to try and widen the number of shareholders you have, for as long as you have a constant stream of investable funds, or a constant stream of funds that are coming in to fund your projects. So that's why it pains me sometimes when I see that our corporate bonds segment of the economy generally is not as active as it could be, because that really is something that drives a lot of companies.
Now, couldn't that change? Now that we know the federal government wants to reduce its participation.
We see that changing quite a lot, and we see a lot more local participation in the corporate bond industry as well. Partly because that's where you get returns outside, depositing your money in banks. That's where you get returns and a certain amount of liquidity and a certain amount of predictability as well on your returns, because you buy into a bond and you have a certain amount of interest that you will get, unless it's a floating bond, of course.
Okay, so all in all, this industry, I assume is probably growing 5-10 years from now. What would we be looking at? Because I know the exchange is doing so much. The SEC, they're trying to grow this market, trying to make it a more sophisticated market. So I'm looking, maybe some of them might be, find the market appealing at some point and then decide to list. Otherwise, perhaps, just remain outside.
Well, the Nigerian Stock Exchange is aiming for a figure of 1 trillion in the next couple of years. That will happen not only because of inflation, but also because